Hello everyone, welcome to Elliott Wave Forecast.com YouTube channel. This is Henry. Happy New Year to all of you. So today is the first trading day of the year, and in terms of GMT time, today is Tuesday, January 4, 2 a.m. GMT. And right here we have the chart of the DAX for today's chart of the day. We finished with one here in the primary degree, right, at 16 to 89, and that means we are now within the wave 2 pullback, and within the wave 2 we subdivide the wave 2 into a symbol A, and then now looking to finish the B, and then soon is going to to do the select on the downside as long as it stays below 16 to 89. Now let's take a look at a couple of things here. I know that some US indices obviously has broken to new high, right? And US indices by no means is bearish. There's no bearish sequence at all. But let's take a look at the DAX structure here to understand the possibility of the extension to the downside, as well as what will be the alternate if, let's say, if it continues to go up and break above 16 to 89. Now, first of all, take a look at this. This move down, it can be labeled as an impulse, right? I mean, I think that one should not be difficult to agree on, that we could label it as an impulse. We can also double check in the RSI. We have a divergence in the wave 5, so price makes new low, but the momentum makes a lower high. It's a higher low, right? So price makes a lower low and the momentum makes a higher low is the definition of a bullish divergence, and usually that appears in the wave 5 of an impulse. So this is reasonable to call it as an impulse. Now I think what's interesting here in the DAX is looking at the structure of the rally. Now this one, no doubt it looks impulsive, right? But look at this leg here. Now this leg here is a clear three waves, right? Now if this is a bullish market, or it has already it is ready to resume to the upside, you would have expected the rally from here is a impulse like this. You would have expected a structure like this, but as you can see here, this is clearly three waves, right? I think it is a clear three waves. So you don't start a bullish move with a three waves, right? Three waves usually is a correction. Now you have three waves, and then you have a three waves pullback, three waves up, three waves down, and then an impulse. So what sort of structure is that? Three waves up, three waves down, and an impulse. That is a flat structure, right? Flat is a 3-3-5 structure. It is a corrective structure, and we are already at the area between 100% 123.6, in which this entire flat could finish, and then from there we potentially actually can see a select to the downside, which eventually can even break below this A. And take a look at this. If this is with 5, so you should have, again based on the guideline, between 3 and 5 you should have a divergence in the momentum, and we do see a divergence here as well. Price makes a high high, momentum makes a lower high. That's the definition of the divergence, right? So we are already, I mean, the structure and the outlooks for now looks credible that this could be a flat, as we have only three is up, three is down, and an impulse with a divergence at the peak. So we may or may not make a marginal high, doesn't matter, but we are getting close to finishing up this rally and then starting to see a pullback. Now if it doesn't go to new low from here, then at minimum we could just do a pullback to correct this 5 ways up here, right? So at minimum we can see a 3 pullback to correct this 5 ways up if we don't, let's say, do a select like this and break the below here. Okay, so for now, shorter cycle, simple. As long as we stay below 16 to 89, this is what we expect. We can see at least 3 pullback to correct this 5 ways, if not doing a select on the downside. Now, what will be in the alternate if it breaks above 16 to 89? Now, this rally, as we mentioned before, it looks really like a 3 waves. Very difficult to try to label this as a 5 waves impulse. Now you don't start a bullish leg with the 3 waves in the first leg, right? So if it breaks above 16 to 89, a couple of possibilities here is, if you take a look at the 4-hour chart, one possibility will be Now take a look at the 1 hour chart again. If we label this as a wave 1, then basically somewhere before this one it has to be a 5 waves, right? So it has to be something like this in order for you to call it as a wave 1, right? And so that means if it breaks above this 16 to 89, there are two possible alternates I can think about. One possible alternates will be that this is doing a flat like this, expanded flat A, and then it makes new high, and the new high is a bill. I mean that is assuming you still want to, you still want to call it as a, you still want to call for another leg lower, which you don't have to anymore if it breaks the new high, right? But that's definitely one possibility doing this. Now, what's the disadvantage of this? Well, the disadvantage is this one will be too long, right? It will be too long to be a B, and then also this one looks impulsive. Whereas if you call it expanded flat, then the A has to be a corrective structure, right? So that's the disadvantage, calling for an expanded flat if it breaks above here, which is therefore is probably not likely. And the other option will be simply that instead of ending 3, this is your ending 5, this is your 3, and this is your 4, and we are in the 5. Now in the 5, so that means we will be seeing something like a 5 ways up like this before ending 5 of 1 here. That will be another option. Now the with this option here, you can see this leg here is a 3 waves, so that's the problem. I mean, if you want to call 5 waves, then you would rather see this as a 5 waves subdivision in the first leg, but this one is clearly 3 waves. But since if this is within wave 5, so what happens here is we could be technically in a ending diagonal. So this could be a 3 wave, so this could be 3 waves ending 1, this could be 3 waves ending 2, this could be another, like some sort of 3 waves ending 3, right? 3 waves, even though it looks impulsive, to be honest, but we could be doing, let's say, something like this, maybe something like this, 3 waves here, 3 waves here, and then it will look like a wedge, and then 4, and then a 5 like this, right? So it will look like a wedge overall like this before finishing 5 here and then drop. So if it breaks above that peak here, then those are all possible options. But for now, due to the fact we have a divergence here, and due to the fact this is 3 waves, we think this is the primary view for now, that as long as we stay below 16 to 89, we might see at least a 3-ish pullback soon, if not going to extend lower in the C leg that will break below the A leg. Okay, so that's the update here for today. And as always, if you do want to check our service, we have we cover indices, forex, and commodities, stocks as well. We have 14 days free trial, not free trial anymore. We have 14 days trial for $9.99, and the link is provided in the description of the YouTube video. So I'll see you all again tomorrow, and have a nice day, everyone.